For decades, the US has been vulnerable to oil price shocks stemming from the political volatility in the Middle East. In 1973, oil prices quadrupled when American support for Israel in the Yom Kippur War with Syria and Egypt prompted Arab members of OPEC to impose an oil embargo on the US. Similar oil price shocks unfolded during and following the Iranian Revolution in 1979 and around the Gulf War of 1990. So, in April 2024, the first ever direct military strikes by Iran on Israel, in retaliation to Israel bombing its consulate in Damascus, brought fears of another oil price surge. But despite a brief spike, crude oil prices quickly stabilised after the consulate bombing and the strikes and counter-strikes that followed. And even though the conflict has since escalated across the region, an oil shock from the Middle East is unlikely to devastate the US economy in the same way as it has in the past. This can be explained by the significant impact of the US's shale revolution, which has resulted in an abundance of American oil in global markets. 2 decades ago, the US produced around 7 million barrels of petroleum a day and consumed 21 million. Now it produces almost 22 million barrels a day and is easily the world's biggest oil producer. Imports from the Gulf have plunged, and in 2019, the US became a net oil exporter for the first time. The prolific Permian Basin shale of Texas and New Mexico pumps more oil than Kuwait, Iraq, and the UAE. But although the newfound self-sufficiency has reduced the impact of external events, experts warn that because it remains a major oil consumer, accounting for 20% of global demand, the US is still vulnerable to oil shocks. Shale executives remain sceptical about drillers' ability to increase supply quickly enough to mitigate the impact of a sudden oil shock on the global economy. This is compounded by Wall Street's reluctance to fund new drilling projects, with investors preferring to funnel profits into dividends and share buybacks. Also, some analysts say shale remains uniquely vulnerable to price gyrations, making it an unreliable component of the global oil market. Having said that, shale has changed the supply-demand balance and maybe the geopolitical and psychological balance of America's relationship with oil as well.